All right, everyone, what is going on? Welcome back to another breakdown. Now, I'm going to do something a little bit different and break down Feb as a whole month rather than the individual trades. And there's a couple of reasons for that. I think there's a big overall lesson that played out in Feb, at least for me. And, secondly, to be honest, I was a little bit lazy in Feb. It's a month where I took some time off. My wife and I went to Bali and had a bit of R&R, so I wasn't posting a whole lot in the group, just trying to enjoy our time over there. And we've got a lot of family stuff that happens outside of the charts. And for those that know me, I'm big on proactively prioritizing those things in my life. So not a whole lot of posts to reference in the group for Feb, but I just wanted to go over this one which was on the 25th of Feb here, and went out to the whole group. And as you can see, if you haven't already caught your eye, for me, this was a negative 4% month. So 4 negative trades in a row, including this one here. I was live at the time. This ended up resulting in a full 1% loss. And, this was coming off the back of January, which was potentially my best month ever, 14% total return, but definitely my best January, definitely my best start to a year ever. 3 trades, 7% on Germany 30, lost 1% on UK 100, and another 8% banked on Euro USD. So absolutely stellar month, 3 trades, 2 wins, 1 loss, 14% banked, and then I've gone given 4% straight back to the market. And if you've been trading for a while or participating in the markets, this might look like a consistent cycle that tends to play out. And over the last 4 or 5 years doing this, it's something I've experienced multiple times going into drawdown, taking losses. And if you're a participant in the markets, you'll know that at some point you're going to have a loser, whether it's a trade, day, week, month, quarter, hopefully not a year. But at some point, you will be humbled by the market. We don't control the random distribution of outcomes in the market. We're just a participant. So does that change how we feel, and should it? There's a lot of things going on right now around that I've noticed around mechanical systems, mechanical trading, not having emotion. And I sort of disagree with that. I disagree with the fact that you can remove all the emotion. I think emotion is important as a human, and trying to stifle it or get away from it, or run from that emotion is not a great way to handle it. I think we need to look at it, and rather than put a band-aid on it, what usually happens is people start to revenge trade, system hop, become aggressive, go to lower time frames. The opposite is they become too conservative and start missing positions, not taking positions they should be. But it's all down to how they've reacted to these losses, right? We don't want to be completely greedy, and we don't want to be completely fearful in the market. We want to have some sort of equilibrium and balance, but I don't think you can fully remove the emotion from it. Okay. And, was I pissed off? Was I annoyed at this result? Yes. But did I understand how it would play out over time? Yes. I also understood that, which made it easier to deal with. Right. And I just want to show you one little tool that I found useful when reflecting on things like this, and something I did at the end of Feb. Now, I already know these numbers, but I find it useful to go over them again. And the simple thing to do is just grab a Monte Carlo simulator. So this is a free one here you can find online. Put in whatever capital you've got in your account and start to look at the numbers. All right. So trading is a numbers game, it's a statistical game. We're looking for statistical edges in the market, and understanding what that looks like for your strategy is extremely important. So for me, my win rate is around 50%. I'm risking 1% per trade. We compound our position size as our account grows. We're looking for 2-to-1 risk reward. We'll run a 200 trade sample size for this example, and we'll say our ruin threshold or maximum drawdown we can experience on our account is 50% before we're completely cooked, and we'll run this simulation, see what comes out. So as you can see here, over 200 trades, right, quite a large sample size, we're 100% profitable. We are going to be profitable over time. This strategy is 100% guaranteed to make money. We have 0% risk of ruin, right? We're never going to hit a 50% drawdown. We're capping our loss per trade at 1%. We're controlling our downside. We've got 165% return over that 200 trade sample size. So we're making money. And our max drawdown, or our median max drawdown, sorry, is 7.8%. Let's call it 8, between 8 and 12, 8 and 12 and a half. So at any point in time, we may experience a drawdown of 8% to 12%. Now, would I like to be down 12%? Absolutely not. I don't think anyone would like to be down 12% in their account. But we know over the random distribution of trades following this strategy, that is a completely, don't want to say normal, but it is a possibility. It's highly possible that we reach this drawdown. And realizing that I'm only 4 trades, I think I even took a fifth trade in a row here coming into March that was a loss. Knowing that I'm only 4 trades in and that I could potentially go lower is great for your psyche because you know that you don't need to change anything yet. I don't need to change my strategy. I don't need to change the way I'm approaching the markets. I don't have to do anything right now because I've only got 3 trades for Jan. I've got 4 in Feb. I have 7 trades. We looked at a 200 trade sample size. This is not enough data for me to go change something. I took 3 swing trades that were losers. Maybe I start to look at swing trades a little bit differently, but regardless of what's going on in the market, we're trading a technical system. If an opportunity presents itself, we have to take that trade because over the long run, we will make money. Statistically, we will make money and we can't avoid losses. That's just the price of doing business in the markets. So was February a great month? Technically, yes. I followed my plan. I traded my plan. And would I take all these trades again if they presented themselves? 100%. They were valid setups. Unless you're doing something completely left of field and you're breaking your rules, you're trading outside of your strategy, you're mismanaging positions due to emotion, then you definitely need to look at things. But if you're following your plan, you're following your strategy to a T, this random distribution of outcomes in the market is going to play out in losses sometimes. And you can see this great quote here from Mark Douglas. There's a random distribution between wins, losses for any given set of variables that define an edge. We have an edge. We can't control the next trade. We just have to enter where our system tells us to enter and see what the market is willing to give us, whether we're going to be rewarded or we're going to take a loss, right? And that's why we cap our downside and try and maximize our upside. So individually, these trades mean very little, right? They're just part of the sample size and the data points within our strategy. Your losses don't invalidate an edge. They don't define you, and they're just the cost of doing business. So don't avoid them. That's impossible. We just need to execute consistently, manage our risk, and think in probabilities. Hopefully you got something valuable out of that. See you in the next